Hello. Now we are at the correction for the exercise number 5 of the transaction analysis. So our case study talking about the company Gartios Company. Here's the information about the company for the last accounting period, right? So the first one we have at the beginning of 2018, the company's accounting records has the general ledger account and balances. So the table below. So we mentioned about the general ledger, right? And during the 2018, the following transaction has occurred. So what does it mean for the company have a relation, right? Okay, the company receives 95,000 for cash for providing services to customer, pay salary expense, purchase land, pays 4,000 are not payable, right? Paid operating expense, etc., and pays a cash dividend. So what is our job here? What you have going to do, right? So you have to record the transaction in the appropriate general ledger account, record the amount of the revenue, expense, and dividend in the retained earnings column, and you have a provide appropriate title for this account in the last column of the table, right? Okay, so that's the job. In order to do this, we can do few steps, right? So for example here, the first one, I think that we have here, if you see the table of this transaction, so the code is beginning balance, right? So this is a beginning balance. So it means that at the beginning, the company have a cash of 25,000, land for the value of 32,000. We have a liability 18,000. We have a common stock 33,000, and retained earning from last period is 10,000, right? So that is the company's information. And now what we are going to do, we will analyze all of the transaction, right? So to analyze all the transaction, we have to do few steps, right? So if you remember, we have a few steps, right? So the first step we call is basic analysis for best seller. The first one I think you know already, right? We mentioned about the provide service for cash, etc., right? So when we provide the service, we have a cash increase. We also have a revenues increase. So the appropriate temporary account for this transaction, we have a service revenue, and we have cash, because this will affect the retained earning of the company, right? For the second transaction, the company paid the salary expenses for 50,000. So you have a paid expense. It means that you reduce the asset account by cash for 50,000. However, here you increase your salary. You increase the salaries expenses, but you also decrease the owner's equity, right? So you have to be very attention on this amount. So in this transaction, we have appropriate the temporary account is salaries expenses, right? Because the salary expenses will affect the retained earning of the company. Okay. Now we have a second transaction. We look at another transaction. So in this transaction, you purchase the land by cash. So I think that could repeat many times. When you purchase the land by cash, there's no effect on the total asset account. However, there's a the cash will be decreased the same amount with the land that increase, right? So that's the reason why we can visualize this. Okay. Last, we paid the 4,000 are not payable, right? So it means that you remember for the first transaction, the company, the first information, the company borrows 18,000, right? So now the company pays this amount for 4,000. It means what does it mean? It means that the note payable now decreased for the amount of 4,000 because the company pay by cash. So it means that the cash assets also decrease for the same amount of 4,000, right? Okay. So I think maybe too fast, but I hope that you got my point. There's no effect on owner's equity, right? So two sides now there's the same amount of the decrease for 4,000. Okay, now we go with another transaction. The company will pay the operating expenses, right? So you know that when you pay the operating expenses, so this transaction will reduce the assets, the cash of the company for the amount of 22,000. However, because you increase your operating expense, so this here you can see that this increase for the amount of 22,000. It means that the owner's equity decrease. Owner equity decrease, right? Decrease. Okay, for the same amount of the owner's operating expense. So that's the reason why here we have this operating expenses that affects the retained earning of the company, right? So remember always when you have expense, you increase your expense, but you decrease your owner's equity, right? Okay. Okay, so we continue with the another transaction. The companies paid cash the dividend of 2,500, right? So if you pay cash, it means that you reduce the cash asset of the company for the 2,500. You increase your dividend, right? You increase your dividend, here is increase. However, you know that return earnings should be less the dividend. It means that you decrease the return earning and decrease the owner's equity. So owner equity in this case is the same with the expense is a decrease, right? Okay. Okay, so this is a transaction number 6. Paid cash dividend, decrease cash, decrease the owner equity, and we have a temporary account here is a dividend, decrease, increase, right? So now after this transaction, what we are going to do, you input all of the transaction in this table, right? So you see from first transaction, second transaction, and you see transaction. Finally, you have how to say, you have to summarize all of the amount of your asset account or your how to say, here we have a two asset account, cash and land, and we have a one liabilities account is a note payable. And for the stockholder equity, we have at the beginning 33, and we have a return earning 10. So how can we come to the return earning? So return earning 10,000 from the period before, right? So now let me help you to calculate the uh, return earning at the end of the period, right? Should be equal to return earning at the beginning plus the revenue during that period, right? Revenue minus the expense, right? Expenses, right? Or we can mention that return as a net income, right? Plus the net income. However, the net income should be equal to revenue and minus the expense, right? Okay. So now you can have this one 10,000 K plus the all of the revenue 95,000 K minus the expense, right? Minus the my revenue and minus the sorry, here we have a dividend. Okay, let me correct again. Okay, and here we have a plus the minus the dividend also. Okay, so should be equal 10,000k plus the 95k minus the expense 50k of the sale expense minus the 22k of the operating expense and minus the 2.5k of the dividend. So you have the amount of your retained earning is 20,500. So that is the amount that I can help you to find from here. Okay. Okay. So now if you take your how to say your retained earning plus the common stock, so you have your stockholders equity equals 63,500, right? And if you check two sides of the liability plus the stockholder equity, you have the same amount of 77,500, the same amount with the asset, right? So that is what we are going to do with the own transaction in amount US dollar, right? Okay. The last one we call is a account title for revenue. It means the return earnings, sorry. So we have a sale, we have a service, we have the expense, and we have a dividend, right? Okay. I hope that this will be good for you, and I hope to see you in the next video. Thank you very much.